BOJ Governor Kazuo Ueda has just sent a clear signal to the markets. In his latest remarks, he indicated that policy rates will rise as needed, provided economic conditions align. This comes even as the yen faces historic pressure. By the end of this video, you will understand why the BOJ is sticking to its tightening path despite government friction and a plunging currency. For years, the Bank of Japan maintained ultra-loose monetary policy, becoming the global outlier. However, rising inflationary pressures and persistent yen weakness have forced a strategic pivot. Governor Ueda's current stance emphasizes a transition toward accommodative but gradual tightening. This shift is historically significant as it marks the end of an era, but the timing remains highly sensitive to both domestic growth and international market volatility. The immediate reaction to Ueda's speech was sharp. US dollar to Japanese yen spiked to a high of 161.76, reflecting the market's belief that while hikes are coming, the current pace may not be enough to stop yen depreciation. Simultaneously, a rare public clash emerged. The Cabinet Office issued a warning to the BOJ, demanding accountability for rate hike risks and expressing concern over potential economic disruption if growth stalls. This tension between the government and the central bank adds a new layer of uncertainty. On X, traders and analysts are closely monitoring the 162 level. Many posts highlight that Governor Ueda's remarks lacked new elements but reinforced the gradual tightening trend. Market participants are increasingly vocal about intervention risk from the Ministry of Finance, as the yen remains near multi-decade lows. Some traders noted that the yen rose slightly before and after the remarks, yet the underlying trend toward weakness persists as long as the interest rate gap remains wide. Institutional analysts are now pricing in a potential BOJ hike before the end of the year. Some perspectives suggest that if inflation cools faster than expected, the yen could actually strengthen sharply toward the 150 mark. However, external factors like Trump pressure and the upcoming US PCE data are seen as major hurdles. The consensus among financial institutions is that the BOJ will maintain its data-dependent approach, specifically watching Middle East developments and their impact on energy costs. For the Nikkei 225, this policy uncertainty creates a volatile environment. While a weak yen typically supports exporters, the threat of sudden intervention or a faster-than-expected rate hike can trigger rapid sell-offs. Investors are balancing the benefits of accommodative financial conditions against the risks of a policy-induced economic slowdown. The current market sentiment is one of wait and see, focusing on whether the BOJ can navigate a soft landing while normalizing its interest rate profile. The global context is equally critical. Today's focus is on the US PCE deflator at 2130. A key inflation gauge for the Federal. Higher-than-expected US inflation could further weaken the yen by pushing US yields higher. Furthermore, the BOJ is monitoring Middle East developments, as geopolitical shifts could alter the economic outlook. These external shocks, combined with speeches from BOJ members like Tamura, will dictate the timing of the next Japanese rate decision. Individual investors must now navigate extreme currency volatility. Key levels to watch are US dollar to Japanese yen at 162 for potential intervention and 150 for a trend reversal. Traders should avoid over-leveraging in yen cross pairs as government pressure on the BOJ could lead to sudden policy shifts. Monitoring the US jobless claims and the Mexico Central Bank rate decision is also advised, as these will affect broader risk sentiment in the Asian FX markets. Based on current data, our AI scenario analysis suggests three paths. The base scenario sees the BOJ continuing gradual hikes, keeping US dollar to Japanese yen between 158 and 162 as long as US data remains firm. In the yen bullish scenario, if US PCE data cools significantly, we could see a rapid reversal toward 150 by year-end. Conversely, the government friction scenario suggests that if the Cabinet Office successfully pressures the BOJ to pause, the yen may break past 162, forcing direct market intervention from the Ministry of Finance. In summary, Governor Ueda remains committed to rate hikes. the Cabinet Office is pushing back, and the market is testing the 162 yen level. Watch the US PCE data closely for the next move. If you found this deep dive helpful, please subscribe for more insider views on Japan's economy. Let us know in the comments, do you think the BOJ will hike again this year?